Well, thanks to automatic enrolment, many more people, millions of people who weren't previously saving for retirement are now doing so, particularly people on low and middle incomes. But we also know from research by the Money and Pension Service that an awful lot of them haven't got money on hand if they need it for ordinary financial emergencies that people might face at any time. So nearly half of us don't have £500 on hand, and that's the average cost of a financial shock. And nearly a quarter of us don't have any money on hand at all. So there's a big risk that we might be creating a nation of savers, but when they need their money, because it's only saved into pensions, they can't get hold of it. For example, let's say someone's car breaks down when they're on their way to work. They might not have money in their bank account to deal with that emergency, but they have to pay for it right away. So what are they going to do? Well, they might, for instance, be able to borrow money from family or friends, but not everyone has access to that. A lot of people might turn to a credit card and rack up quite a big credit card bill, and they might then not be able to pay that off except by significantly cutting down on their costs, and that might include not contributing to their pension in future. Equally, they might decide not to get the car fixed, but then that might affect their attendance at work. We know now that having financial shocks can actually have a much broader effect than just on your wallet, and it can really affect not just your psychological well-being, but also your physical well-being too. And employers are really starting to get quite concerned about the effects that financial troubles are having on their workers' ability to show up on time and deliver to their full capacity. We know from recent studies that about a quarter of people say that they've suffered loss of sleep because of financial concerns, and 1 in 8 people have said that they've not been able to attend work due to those sorts of problems. And much more broadly, if people aren't feeling great because they're constantly worrying about their money, they're losing sleep, we know they're not delivering as well at work. So employers are starting to realise there is a bit of a responsibility to start thinking about how to help people better manage their financial worries. Well, sidecar savings is a really simple model, but it's based on some of the very latest thinking in behavioural economics. And in order to come up with the sidecar savings idea, we've been working with some of the world's top behavioural scientists, including David Laibson at Harvard University and Brigitte Madrian at Brigham University. And the model is basically, if people need to have both long-term savings and short-term savings, we can really help them do that by managing the way that their money is saved into those two accounts together. So rather than having a pension pot over here and a savings pot over here, an emergency savings pot over here, you can have one system that helps you distribute your money across both those pots and do it automatically through pay. And one of the great things about the way that sidecar savings is working is it's building on the success we've already had using payroll and automatic enrolment to divert people's pay into their pension contributions, and all we're doing is adding to that a payment into a savings account. We're working with Salary Finance and the Yorkshire Building Society to run a sidecar savings trial with a number of employers in the UK, starting with Timpsons, who've already gone live. And the way the system works is really pretty simple, and we think for employers it's something that it's quite easy for them to add to their existing system. So let's say, just by way of example, let's say you've already got a large pension pot that someone's contributing to. As we can see, it's not quite full, and it's got a lid on it, so you can't get at what's in it until you retire. So that's the way things are working now. Money's going into that, the levels hopefully rising quite slowly. All we're thinking about doing here is introducing one more jar, a smaller jar, alongside the larger pension jar, and contributions are going to start flowing into both those pots. And the great thing about putting money into this smaller emergency savings jar is, as you can see, you can get at it at any time. At the moment it's empty, like it is for many people, but as contributions start flowing in, we'll see the pension pot rise and the emergency savings jar also rise. Now, this is a smaller jar, and that's deliberate because we don't want people to oversave into an emergency savings account because they're not going to get as much return as they might if they invested their money in a pension. So this is capped, and when the individual signs up to save in this way, they choose how much they want to be able to save in their emergency jar, and that will be the maximum amount that's saved in there. So each month or each pay period, they save a little bit more into the jar until it fills up. And once that jar's full, it's available for them to use at any time. But those additional contributions then start flowing into the pension jar. Now, of course, because this pot's accessible at any time, they might take some money out of it or some water out of it, and so once the level goes down, those contributions will start flowing back into this jar and not into the pension pot. If an employee decides they want to sign up for the system, all they need to do is go online to the Salary Finance website, tell us how much they want to go into their emergency savings pot as an additional payment every pay period, and also how big they want their emergency savings jar to be, and from then on the payments into both accounts will all be done automatically through payroll. So as I say, we're really excited that we're already working on a trial of the sidecar savings approach with Timpson, also coming on board very soon are Euston Logistics and Glasgow University. But we're looking for more employers, and really I'd encourage any employer of 1,000 or more workers who thinks that financial wellbeing is important to their workers and would be interested in working on a trial with us, just get in touch, we'd love to hear from you.